We at Great Lakes Hybrids have been serving generations of farmers with outstanding service, the latest technology, and new yield producing proprietary genetics. We're happy to partner with Farms.com Risk Management to bring you this latest market update.
Sectors.
Welcome to the Farms.com Daily Market Commentary for December 13th, 2011. This is Michelle Lamrant, Commodity Research Analyst for Farms.com Risk Management. According to the U.S. Meat Export Federation, U.S. pork exports in October of 2011 totaled 482.4 million pounds. This was up 9.2% from last month and up 42.2% compared to October of 2010, as you can see indicated in the pink line in the chart in front. Cumulative year-to-date, pork exports are up 22.8% from last year's pace and volume, as you can see indicated by the lime green line in the chart in front, with Japan, China, including mainland and Hong Kong, Mexico, Canada, and South Korea remaining the top 5 export markets for U.S. pork in October. These 5 markets accounted for 84.1% of total U.S. pork exported that month. China alone imported 277% more U.S. pork compared to what they did in October of 2010. Japan was once again the biggest volume buyer of U.S. pork in October, purchasing 131.6 million pounds, up 8.9% from last month and up 37.8% from October of 2010. This accounted for 27.3% of total pork exported in the month of October. China was the second largest volume of U.S. pork, purchasing 129.3 million pounds, up 35.1% from last month and up 277% from last year. Pork imports by volume in October were up 9.3% from last month and down 11% versus October of 2010. The vast majority of pork imported into the U.S. in October came from Canada and totaled 53.3 million pounds. U.S. beef exports in October 2011 totaled 229.9 million pounds, down for the second month in a row at negative 2.2%, but up 10.7% from October of last year. Year-to-date, beef exports are up 25.4% from last year's pace in volume. Mexico, Canada, Japan, and South Korea remain the top 4 export markets for U.S. beef. U.S. beef imports for the month of October were down 4.7% from September and down 4.4% from September of 2010. 74% of beef imports in October came from Canada, Australia, and New Zealand. So bottom line, U.S. meat exports are on track for a record-breaking year in 2011. A large portion of the growth in the pork exports came from China, where record-setting imports, up 277% year-over-year, were a result of a Chinese effort to cool soaring inflation rates and high wholesale and retail pork prices in the country. Record pork exports and strong domestic demand are the main contributors to high lean hog futures prices that are expected to persist into 2012. There's no change in our sentiment, and we remain bullish on livestock futures with the following 2012 targets. For hogs, our price target per carcass, based off the futures contract June 2012, is between $110 to $115 per carcass. For live cattle off of the April 2012 contract, our target is between $140 to $145. And for feeder cattle off of the August 2012 contract, our price target is between $170 to $175 per carcass. In other news, with 2 months left to go in the reporting year, U.S. ethanol shipments stand at 868 million gallons, well within sight of 1 billion gallons for the year. In October, the U.S. exported 602,000 metric tons of DDGs, 12% below last month and 22% below that of October last year. China remained the primary export destination for U.S. DDGs. The expansion of China's canola crushing capacity, coupled with lower domestic production, is likely to lead China to boost imports of the oilseed next year. Industry sources speculate that the country could import over 2.5 million metric tons of canola next year, shifting imports from canola oil and meal to simply canola. Strong crushing margins since October have already prompted crushers to stockpile supplies of Canadian canola in recent months. According to Brazilian grain analyst Solaris, the country's first corn crop is now 96.5% planted, while the 2011-2012 soybean crop is now 94% planted. Dry weather is being increasingly worrisome as the forecasted rains next Tuesday to Thursday is extremely important in the southeast areas of Brazil and Argentina. If substantial rainfall does not come, it could lead to a strong trade reaction as production estimates will likely be reduced for these regions. Morgan Stanley lowered their price forecast for corn, soybeans, and wheat, citing negative market sentiment and higher global supplies. According to Morgan Stanley, corn is expected to average $6.60 per bushel in 2011-2012 and $5.75 for the 12-13 marketing year. Soybeans, at their price target for the 11-12 marketing year is $12.75 and $12.70 for next year, and their target for 11-12 wheat is $6.70 per bushel and $6.30 per bushel for the 12-13 marketing year. China's Commerce Ministry is forecasting China's December soybean imports at 5.39 million metric tons, higher than last week's estimate of 4.2. U.S. weekly retail sales were down 2.8% in the first 2 weeks of December compared to that of November, but up 3.1% compared to that of last year. The Canadian Grain Commission reported that as of the week ending December 4th, export clearances of all grains and oilseeds shipped from Canada totaled 10.9 million metric tons so far this marketing year, up 491,600 metric tons from the 10.5 million metric tons moved last year. Grower deliveries during the week included 463,000 metric tons of wheat, 51,800 metric tons of durum wheat, 35,700 metric tons of oats, 66,500 metric tons of barley, 6,700 metric tons of flax, 350,100 metric tons of canola, 49,600 metric tons of peas, and 15,600 metric tons of corn. That's all for today. Have a nice day.